It's been a little over 2 months since I last looked at Chainlink. Since that time, so much has happened it feels like an eternity. The main question that needs to be addressed is, am I still bullish on Link? No, I'm not. I'm super bullish. I'm your crypto guy, and in this video, I will be diving back into Chainlink. I'll be taking a look at the latest updates, integrations, and partnerships. I will also be addressing the recent Zeus Capital fiasco and how FUD fails. And finally, I'll be digging into the latest network and market metrics. Oh, and I also have a Link price prediction that you don't want to miss, so be sure to stick around for that. Before I get going, gotta cover my ass. I'm a crypto guy, but not a financial advisor. This therefore means that everything I say is for your educational benefit and cannot be construed as financial advice. Always DYOR before jumping into those crypto waters. Also, if this is your first time at the Bureau, welcome. I regularly cover all things crypto, including news, reviews, and handy guides. So if that's something you'd benefit from, then I encourage you to hit up that subscribe button. Turn on those notifications as well so you're alerted the moment another video hits the tube. Okay, enough with the legal wish-wash. Let's get going. As I mentioned, I've covered Chainlink quite a few times in the past. The most recent of those was back in May, where I comprehensively broke down the investment case for it. I encourage you to watch that if you've not seen it already. It's right here. It'll help you better understand the underlying tech and tokenomics. Since that time though, Link is up over 100% as it has emerged as the de facto off-chain Oracle solution. However, there are some people who did not quite like this rally. Some people who thought it would be a good opportunity to manufacture some FUD and short sell Link. I am, of course, talking about that much discredited Zeus Capital report. So, I think this is a great subject to start with. For those of you who don't know, the Zeus Capital report was an extremely bearish research report that claimed that Chainlink was a fraud. It was quite a sizable report, 65 pages in total. Now, there was so much to unpack that I can't do it all here. Over the past 2 weeks, members of the Chainlink Marines have done just as much. What is important to note about this report is that the authors have made it clear that they are actively shorting Link. This clearly shows that they were trying to profit from a fall in the price. They wanted to create the narrative that a large and well-respected asset management firm has called Chainlink a scam, a narrative that they would ultimately profit from. They used a technique called Gish Gallop, which is a debating tactic where you overwhelm your opponent with as many arguments as possible, irrespective of the accuracy of said arguments. The hope was that this would sow fear, uncertainty, and doubt across the community, forcing them to sell. The only problem is you can't gaslight people who know their shit. Anyone who knew a few simple things about Chainlink would have seen this report for what it is. The report was also poorly written and full of grammatical errors, not something you would expect from a highly respected research firm. Now, of course, there was so much more to this research firm than meets the eye. They clearly didn't know how to cover their tracks. For example, they attempted to piggyback off the name of another actual firm called Zeus Capital. The latter came out forcefully claiming they had nothing to do with the report. The Zeus Capital domain that they used in order to post the report is less than 7 months old. There are no other research reports on the site, and there was no information on the team. There are no legal companies behind the name, apart from the aforementioned actual UK-based asset Zeus Capital. So yeah, these guys clearly failed if they wanted to create some sort of an image of prestige. They also failed to substantially impact the Link price. So one can only hope that they're deep underwater with those short positions. So who was behind this report then? Well, community sleuths did some digging and identified its links with Nexo Finance. There were coding clues in the source code of the site, as well as local drive links in the report itself. Finally, you also have the fact that Nexo borrowed 350,000 Link on Aave a few days before the report. I've linked to all these resources below, by the way. Is it Nexo Finance? Well, no one can know definitively. What we do know is that market manipulation is alive and well in the crypto space, just that these blokes ain't too good at it. Anyways, I want to move off the FUD for now and look at some of the most important bull cases for Chainlink. So, why is Chainlink all the rage currently? Well, it comes down to two words: decentralized finance. We all know that DeFi is one of the hottest crypto trends of 2020. The growth in the sector has been unprecedented to say the least. For example, take a look at the number of dollars locked into DeFi over here. At the beginning of the year, we were sitting at just over $677 million. At the time of this video, we are sitting at over $3.5 billion locked into these protocols. It's pretty astounding. There are numerous different DeFi protocols which have different functions and purposes. However, there is one thing that they all need access to, and that is reliable, secure, and, most importantly, decentralized off-chain data. It's the missing link. Chainlink has emerged as one of the primary Oracle providers for these protocols. This is because they've already built one of the most robust Oracle networks run by a decentralized collection of nodes, the ideal middleware solution for DeFi protocols. The smart contracts built into these DeFi protocols reference these Chainlink oracles for important data needed for the smart contracts to function. This includes info like crypto and traditional asset prices, interest rates, inflation rates, etc., etc. Now, there are skeptics out there that claim that Chainlink oracles are not needed, that projects can just build their own oracles into their smart contracts. Well, yes, they could. But it would be akin to a small fintech firm saying, we don't want to pay for Bloomberg or Reuters financial information, we want to build our own financial news service. It's essentially trying to reinvent the wheel on a grand scale, which not only wastes resources, but is also pretty risky. So, why is that? Well, the most obvious reason is because the data may not be that reliable. The Chainlink oracles source information from a large collection of nodes. If only one of those nodes were to give the incorrect information, then it would not materially impact on the reference price. However, if you are a project that built your own oracle or that's using a single oracle source, you could be fed incorrect information. Either there could be a bug in the oracle code or someone could exploit the oracle and profit. This is actually something that has happened quite a few times in the DeFi space. Perhaps one of the most recent examples has got to be those flash loan attacks on the BZX lending protocol. The exact mechanics of the attack is explained in a post I've linked to below, but here is a 30-second rundown. The attacker took out a sizable flash loan in order to drive up the price of a particular token, in this case SUSD. This makes it incredibly valuable in the BZX ecosystem. The attacker then borrows another token with the SUSD and profits. Here, the main risk came from the fact that BZX was using Kyber as a price oracle. Kyber pulls data from Uniswap, which is an on-chain DEX protocol. Large orders in the Uniswap pools will materially impact the price, a price that's used to reference smart contracts and hence lending limits. Anyways, the main takeaway here is that using insecure oracle sources can be costly for a DeFi platform. It should also be noted that not long after the BZX exploit, they announced that they were integrating Chainlink oracles. In fact, the team states that the integration was a direct result of the attack. Quote, "We have worked closely with the Chainlink team to identify vulnerabilities and integrate superior solutions to harden our overall security." Of course, there are many protocols that did not need to suffer an oracle exploit to know that Chainlink was the way forward. The vast majority of the top protocols in that ranking list have integrated them. So let's take a look at some of these, shall we? First up on our list, we have Synthetix. This was one of the first few DeFi protocols to integrate Chainlink oracles into their protocol. Essentially, Synthetix uses Chainlink price data feeds in their decentralized exchange. What's particularly interesting about this is that they're referencing prices of traditional assets. This is in order to price their synthetic synth tokens. These include the dollar, euro, Aussie dollar, Swissy, sterling, yen, and even gold and silver. You can see an overview of exactly how the Chainlink Oracle is getting the price of gold here, for example. This shows how the Chainlink oracles can be used as a connecting fiber between real-world assets like fiat currency and commodities with blockchain assets. Second on the list, we have Aave. This is a decentralized lending protocol that's currently ranked as the third most valuable in the ecosystem. I've covered Aave in more depth in a separate video, which you can watch right here. So Aave uses Chainlink in order to secure their Oracle network. Aave needs to reference important price and interest rate data from a host of other platforms in the DeFi ecosystem. They need to make sure that they're not only Sybil resistant, but also reflect real-time conditions. For example, over here you can see the reference data for the DAI ETH price that Aave pulls in. Using all of these node operators reduces single points of failure. Anyways, next up we have the Kyber network. This was a relatively recent integration, and we'll see the Kyber swap DEX use the Chainlink price reference data to update its asset prices. This will complement the current pricing model on the Kyber swap, which references the Kyber protocol. This was of course an on-chain data source and was susceptible to mispricing. Indeed, prior to this integration, users were always encouraged to double-check the prices before swapping. However, with the Chainlink integration, Kyber swap will have a reliable method to reference off-chain data sources and thereby bring pricing back into line. Here's an overview of the KNC ETH decentralized Oracle network. Now, there are a lot of other DeFi protocols that have implemented Chainlink oracles, and I can't go over all of them in this video. You can see a full list of them, however, over here. So why am I telling you all of this? Well, I'm trying to illustrate just how vital Chainlink is to the DeFi space. It is the go-to Oracle service, and that has distinct competitive advantages. Oh, and this is just Chainlink's dominance in the Ethereum-powered DeFi space. Let's not forget that there are a number of other underlying protocols that are being used to build DeFi dApps. For example, there is the Binance chain that has the Binance Smart Chain. It's on this smart chain that developers will be able to code smart contracts and build dApps. However, they will need access to some reliable off-chain data, am I right? Yep, Binance recently announced that the Binance Smart Chain will integrate Chainlink's Oracle solution in order to build out DeFi dApps on the newly launched Parallel chain. And this is just one other blockchain. The important thing to point out here is that Chainlink is blockchain agnostic. One middleware to connect all blockchains and ecosystems. Okay, so you get the point. Chainlink is the jello that makes this whole PB&J DeFi sandwich so delish. Now, while DeFi is the driving force behind Chainlink, it's not the only place where the project is making waves. There are a number of other high-profile partnerships that the project has recently entered into that see it further advance adoption. Perhaps the most recent of this is a partnership with T-Systems. For those that don't know, T-Systems is a subsidiary of Deutsche Telekom, one of the largest mobile phone operators in Europe. With this partnership, T-Systems will look to run a Chainlink node. They will provide Chainlink with this off-chain data and in return will be rewarded in Link. This is a process called generalized mining. So, not only do you have another reliable and high-quality source of off-chain data for the Chainlink ecosystem, but you also have a high-profile company earning crypto to provide said data. It's a perfect demonstration about how large companies could bolster the network by partaking in it. Another really illuminating integration with the Chainlink network is that of Centerprime. This is a Hyperledger-based project that has access to the Korean Open Banking API. This API streams foreign exchange data from several South Korean banks. So, what is the significance of this? Well, it shows how the traditional financial industry can bolster the Chainlink network. These local FX exchange rates will help to advance the development of DeFi dApps that rely on Korean won data. And one more partnership that I want to take a look at is the one with Firmachain. This will see the latter integrate Chainlink's Oracle network in order to provide data for blockchain contracts. This is pretty neat as it extends beyond financial data. It shows how the Oracle network can be used in order to feed other types of data. In the case of Firmachain, this would be data that's needed in order to enter into legal contracts. It's another use for Chainlink's Oracle network to an age-old multi-billion-dollar industry. Okay, I know I'm getting carried away with all these partnerships and use cases. Truth is that the use cases of Chainlink are kinda like a rabbit hole. I can get lost down there for days. However, what most of you are probably interested in is that link price performance and its potential. So let's take a look at that. Now, for those of you that have seen my previous video on Chainlink, you will have seen why the Link token has value in the Chainlink ecosystem. Basically, there is immense utility demand from using the token in the protocol. There's demand from both those that are using the data and those who are supplying it. The former are the dApp developers and the latter are the nodes. The developers of these smart contracts need Link in order to pay for the most reliable data. The more users there are in the ecosystem, the more demand there will be for these services, and hence the more the nodes will charge. So, this has a naturally positive effect on the price of Link. You then also have to consider that the node operators need Link in order to bond it into a smart contract. Not only does this increase the demand for Link, but it also decreases the supply on the market. For example, if we hop on over to glassnode.com, you can take a look at the total amount of Link that's locked up in smart contracts. This has been on a considerable rise since the beginning of the year. So, from the node operators, we have more demand with less supply, which of course is positive for price. But this is only one side of the crypto coin. You also have to consider additional demand from those who would like to hodl Link for investment purposes. This is investment demand, and it is currently the predominant force behind the Link price appreciation. One of the most telling examples of this is the growth of new non-zero Link addresses. Here's a chart that I've pulled over at Glassnode. As you can see, in about July of last year, the number of addresses started stacking up. Then in February of this year, they took on an exponential bend. You may also want to check out this chart. It shows the total balance of Link on exchanges. As you can see, this has been on a downtrend since March of this year. Exchanges are holding less Link, even though non-zero address balances are on the rise. So this clearly shows that investors are hodling Link. Sending Link off of the exchanges in order to hodl it in their offline wallets. Not only does this demonstrate that investors are hodling Link, but also that the available supply on the market is decreasing. Let's also not forget that Link is an asset that is fixed in supply. And it's not just that more and more people are investing in Chainlink, it's that the community is growing. A more active and engaged community is long-term positive for the health of the ecosystem. It creates awareness among those who would otherwise not have heard about Chainlink. For example, here is the growth of Chainlink's Twitter followers over on Santiment, steadily increasing over the past 5 months. You also have this overview from Lunar Crush that looks at the Chainlink 6-month social activity. It shows that the social growth is not just an actual number, it's increased engagement and contributions from those in the community. This makes them quite different from some other crypto communities with sock puppet armies and salty shills. Oh, and while we're on the Chainlink community, I do encourage you to follow some of the well-known Chainlink accounts like Chainlink God, the Crypto Oracle, the Link Marine, and a whole host of others. These guys share super insightful information on Chainlink and help break down its significance in the crypto space. Anyways, apart from making the community more inclusive, it also helps drive positive investor sentiment. It's not just about holding Link and hoping for a price increase. It's about investing in Link because you know exactly why price will increase. That about does it with most of my Chainlink updates, folks. I want to leave you with a few of my final thoughts. Firstly, you cannot talk about the DeFi revolution without covering Chainlink. The network is so well positioned to benefit from the growth of the sector. All of these projects need access to this off-chain data, and Chainlink is the only one ready to fill the breach. Sure, they can build their own oracles, but I've shown that this is fraught with danger and difficulty. Sure, they could use an alternative like the Band protocol or Coinbase's Oracle service. But the former has got nowhere near the same data support, and the latter is, well, Coinbase. At the end of the day, Chainlink is an Oracle network that has already gained substantial network effects. Everyone knows that they are the de facto solution, and the more integrations there are, the easier it becomes to integrate. The adoption feeds on itself. These oracles are also ideal not because they're easy to integrate, but because of the quality of the data that they pull in. Decentralized and provided by top-notch node operators like T-Systems and Centerprime, among others. All this adoption of the Chainlink network is positive for the price of Link. Utility demand is already an important driving force, as evidenced by the Link locked in smart contracts. Add to that all the investor demand, and you have a whole lot of people that want to hold Link. A whole lot of demand for a cryptocurrency that will power a new paradigm in blockchain middleware. So, perhaps all of these indisputable facts is why that Zeus Capital report has had so little impact. Oh, and I almost forgot my Link price prediction. Well, currently there is strong momentum for Link, and I don't see the DeFi sector slowing down anytime soon. So, short of any black swan events, I could totally see Link above $20 by the end of the year. It's that level that I'm targeting, and it's the reason that Link makes up such a large portion of my portfolio. Bullish AF, in other words. And that's it, my fellow crypto fans, my update on Chainlink. Now, what do you guys think? Do you agree with my analysis? And do you have any questions for me? I'd love to hear from you in the comments below. And finally, if you liked this video, then give me that thumbs up. And if you love this video, then smash that subscribe button. Much more Chainlink analysis is in the pipeline. There was one more thing that I needed to tell you guys. It's about my weekly newsletter. This is basically my way of sharing everything I wanted to but couldn't fit into this video. This includes things like coin reviews, project updates, market analysis, and a host of other pertinent tidbits. So, does that sound of interest? Well, don't delay. Quickly head on over to the description below. There you'll find a link to my sign-up form. Once you're there, all you need to do is insert your email and hit submit. You'll receive a confirmation email, and that's it. You are part of the Coin Bureau crew. Oh, and don't worry, I damn well hate spam, so you won't be getting any from me. One email a week, I promise.